Before I do the update tonight, I want to make a short video about multiple viewpoints and multiple counts on particular charts. Recently, I've had a couple of pairs that I've shown multiple views on, and other charts that I have shown singular views on. And I'd like to explain why that is, because with Elliott Wave, you always need to deal with multiple counts. It's simply something you have to put up with, have to deal with and manage, and have to learn to put to your advantage, really. It helps in many ways as it allows you to know when you're wrong, when the wave count is wrong, not to hold losing positions, but it also adds more data, some confusion. So I will make a separate video on a principle called Occam's razor, OCCAM. If you're not familiar with this, it's worth looking up. It's essentially the law of parsimony. So you're able to, it offers you, as a reminder, basically, a principle of using simplicity, of avoiding assumptions and working on guidelines where simplicity, clear counts, the avoidance of excess assumptions or preferably any assumptions will work to your advantage. So choosing between charts, that's between counts, that's an important rule or guideline rather. I will go over that separately, but what I want to deal with right now is multiple counts and the reason I've been using them. For example, on Euro Canadian and US dollar Canadian, I've been offering multiple views in the past few days or past few weeks, and on Aussie New Zealand and Euro New Zealand for the past month and a half since I started to make videos, I've been offering only one view. And the reason for that is mainly where the price is placed at that time. In Euro Canadian and US Canadian, the overall view is bearish, but because of where price is right now, I have to offer two views for myself in that there may be a further up move before bearish resumption, or we may be seeing a downturn here. So I have to choose between those, and that depends on price action. Whereas with Aussie New Zealand and Euro New Zealand, the price reached such extreme levels that there was only a bullish count to deal with, a bullish scenario. So the count there was singular. So I'll just go over this in detail because I don't want anyone to either misunderstand or to take an idea that I'm simply offering for as a viewpoint and for education as something literal, or rather not literal but definitive. So regarding Euro Canadian, I've been offering two views on this. To look at the daily, one is a possible flat here to complete wave 2 of wave 3. And I went over this in detail last night for a possible 5-wave view there. This as a guideline, this was a triangle, I've simply extended the line. And the other count is not the flat, but a large leading diagonal, which is a possibility. So 1, 2, 3, 4, 5, and then wave 2 and a big collapse. So between those two, I need to choose what is more likely. And the first one I deal with is the flat because we are in that price territory. We've had a structure which I can label as 5 waves, even if it's not ideal. And so I'm dealing with this bearish count first. Now, if it simply moves up and is negated, then I will deal with the alternate count, which is a possible, only possible leading diagonal here, which replicates the other leading diagonals of the past of many years ago. But until this count is done, I'm dealing with this. So that's the reason, essentially, current price placement, pattern completion, and I deal with the immediate term count because it could take on this more bearish view of wave 3 of 3 starting now. So until this is done, I will hold with it, though it's not looking at all impulsive and stocks are still up, even if there's divergence. For now, I'll hold on to it. And if this is negated, I will move up. So that is the reason for two counts here. It simply depends where price is in relation. The overall view on this is still bearish. I presented a bigger idea here as well for a larger correction, but immediately it's bearish anyway. It just depends where that next bear impulse begins. Here from a flat or higher for a possible leading diagonal. And it's similar on US Canadian dollar. I'm bearish on this pair following a 5-wave impulsive decline in 2016. The question here in the middle of nowhere, since this 1-2-1-2 count was broken here, is are we starting the next wave down now for the big wave 3 or possibly C? Or is there another high up for Z? And so I've offered this view in the past few days that this 5-wave decline could be 3 or it could be 5. I presented both cases, I think, on Tuesday's video on the 21st. I still favor the move up. There's no impulsive decline here, but I present this first, and I will be taking this first just in case it collapses. I would like to be in on this. So that is the first view, and will be discounted on a break of this high. Because what we have right here is a possible 5-wave decline here, and this is a 3-wave correction. Though it does add more complexity to the chart, and I would prefer to favor the single view of WX and another move up for Y. I have to take the clearer first move, well, the first option as such, because we do have a possible bearish impulse here for a decline. So those are two distinct views. The violation points are clear, the possible moves are clear, but they are two distinct views. I cannot narrow it down more than that except to say there's a possible bearish impulse here, or we move higher for another bearish impulse. And this is why you don't get married to a view, and this is why you don't put all of your eggs in one basket, so to speak, and over leverage, because there's always another account when the price is not at an extreme level. If it gets up to here, I would consider it, not extreme is the wrong word for this, but I would narrow my views down to bearish views up here. Whereas here, although overall I'm bearish, there is possible move up for another few more 100 points higher. So I have multiple counts here, whereas when price moves up here, I will only have one count, or rather one view which is bearish. If it declines from here, then I will also have only one view bearish. But depending on price placement, there are multiple counts. Now, to use Aussie New Zealand as an example, I had only one count here. I mean, where you have multiple counts is in this region, basically. When price came down to here, as I started the video, I think I started making these videos around here. I had only bullish counts. You can go back and see if you want to, but when price comes down to here, there's only one count. Since I've been making these videos, I've only been bullish on this pair because price reached an extreme, a 78.6 level of this 5-wave impulse and of this second 5-wave impulse. So there were only bullish views on this and no bearish view whatsoever. If it had simply continued down, this would have been invalidated and I would not have had a trade. But the simple point is that one view was only available here. And that is because price had reached an extreme level following an impulse which was the predicted, which was the foundation for the view. Same with Euro New Zealand. Within this wedge, this ending diagonal, there was only one view. There was a view here in December that it may be ending. There was another view here when it did end. I think one of my first comments in this, when I started to make videos at the beginning of February, was the bullishness of this pair. And when it was around here in wave 2, there was only one view because of the extreme price level in the ending diagonal and the 5-wave impulse here. So these pairs have had only one view. The Canadian pairs have two views. It depends on where price currently is. Of course, if you're dealing with corrections like this, which I'll go over in today's video as only a possibility, there will be more counts with possibilities, more counts with corrections. There are more possibilities in corrections. And that's where most traders get into trouble because it chops, and we've all been chopped to death in certain corrections. What else I would say is that mainly when you're trading on your own, you have to find a way to manage multiple Elliott Wave views, because in extremes like Aussie New Zealand in the wedge, sorry, Euro New Zealand here, Aussie New Zealand here, this is relatively easy trading because you're at certain Fibonacci levels, you have a wave structure to work with, you have chop to work with, you have invalidation points to work with. There's only one view, bullish in this case, bullish with Euro New Zealand. But with current placement, when price is not impulsing, then multiple views open. And here we have US Canadian not impulsing, it's been correcting. Now, the question is it correcting this? Or is it still in a larger wave 2 for a very complex WXY, XZ pattern for maybe another move up, which I still prefer, given how this 1-2, 1-2 here was invalidated. So that is it. It's you could say right now, as it's correcting, it's in the middle of nowhere, and all we have to work with is a possible 5-wave decline, which I don't like, but which can be used for the time being, barring invalidation. So that's it. One day, maybe in the next few weeks, I'll try to do a longer, better prepared video on Occam's razor and the importance of a simple viewpoint with few assumptions when you are choosing between Elliott wave counts. But for now, I just wanted to make that clear because price placement and corrective price movement will increase or decrease counts and possibilities depending on where you are in the chart and what the price movement looks like for the next sequence or the whole cohesive complex, basically. And when you're impulsing, that's easy. If you have something like this is an easy impulse to take because you're working on a bigger structure and there are a few possibilities. So in any case, I hope that clarifies something at least, and that price placement is crucial, and so is price movement and composites and the rest of the nature. All right, I'll do an update later. Bye-bye.